So good morning, friends. Like we sell our products, similarly to raise funds, we need to have make a marketing pitch to the investors, And so I'm just speaking about more on do's and don'ts of pitching to the investors, so that you fairly understand what are the intricacies in terms of fundraising for startups. So I'm starting with the marketing mantra for startups, by giving some quotes of VCs, and particularly some of the important quotes are like, be so good they can't ignore you, so your presentation needs to be extremely good, consisting of all important facts of your product or services, and it has to be so good that they can't ignore it. Then this is also a very nice quote. When you are talking to me in the first minute, I'm thinking, is this person a leader? So a startup needs to have, the founder or the co-founder needs to have that leadership qualities, in terms of raising funds. Similarly, you have to be a good communicator. If you are going to be a leader and hire a team, assuming your product is successful, you are got to be a really good communicator. And similarly, your product has to be exclusive, some out-of-the-box sort of a thoughts, products that need to be depicted, or the services need to be depicted to the VCs. So three things are coming, and this also I think you have to be decisive. The only way to make progress is make decisions. So 2-3 things is coming out of the VC's point of view, that you have to be a leader, you have to be a good communicator, and you have to be a decision maker. These three things for any startup requires these qualities to approach to the VCs. These are some of the important metrics, which a startup should know, before presenting to the investors. I just point out some of the important metrics. MRR is monthly recurring revenue, that is monthly total of paid customer fees. Then ARR is annual recurring revenue on an annual basis. MAU and DAU, these are two important, like monthly active users other than one-time users per month, and daily active users other than one-time users per day. Then net churn, monthly churn rate, these are some of the MRR, TAM, these are two important, TAM and TAM is total addressable market, and the burn rate, that is monthly cash burn rate. So these are some of the important short-term matrices which one need to understand before approaching the investors. I am little short because I have got 15 minutes only to complete the presentation. We can talk offline on this. So what are the categories of investors? There are three types of basically investors. One are the debt investors. You have many debt funds, they approach many a times to investors to give debt to the startups. So it has got fixed return and with security. They are called venture debt funds, and they can be approached for funding also. Then there are strategic investors. Strategic investors are bigger players who are having similar type of businesses, but they are looking to acquire or invest in some startups, where there is a comprehensive combination between the two business models. So their focus is more on business synergies, market share, and the management. And then the third investor, which we are talking about, is the venture capital, angel investors, and PE. They come with risk capital with some investment returns, that is the IRR they look for, and they have a fiduciary relationship with your startups. So again, raising funds is the main purpose for a startup. So what type of a venture capital, what is the support you get from a venture capital? So they are investing in equity and quasi-equity investments, and they bring along with them knowledge, expertise, and vision. So that is what you get from the venture capitalist. They are not passive investors, and they invest in people, not just innovations. So they are very particular about the founders and the co-founders, their strength, what is that they bring to the table. Yeah, and innovation is another part where they also would like to see how you can change your business model as per the circumstances, changing circumstances and the changing dynamics. So they look to be more towards the, I would say, the categories of promoters, who can contribute in terms of thoughts and in terms of various innovations. Just bringing the Indian scenario, there are 1,800 venture capital funds. That includes angel network, family offices, and their area of investments is health tech, edutech, fintech, and 10 other sectors. And India has emerged as the third largest startup ecosystem in the world with 107 unicorns with a total of 340 billion as of September 22. I think that number must have increased by now. This is just the scenario how venture capital is functioning in India. So what does a venture capitalist look at? They look at a product or service, the business model, the dynamic business model which needs to be changed as per the scenario, the changing scenario, market, team, and capital requirement. So I just give you a small example where we invested. We are also investors in startups and all. So we invested in a startup company which is into manufacturing of various backpacks, and they started just pre-COVID, and the manufacturing of that. The uniqueness of that product is that backpack is massaging your back. So they have a massager backpack, battery installed in that backpack, and that keeps you massaging, so that the load of that bag is the load on the back is reduced. So it's a very unique product, and it started receiving good response from various users. That was just pre-COVID they launched it, but during COVID again everything went for a toss, and what they ultimately, they had to slow down the process. They invested around 1 crore or so rupees, and then they had to slow down the process, and at one point of time they were thinking whether we can continue, because the way COVID was taking toll. But then they came out with a unique thought. Since they have using the same material, so they started manufacturing masks during that time. And believe me, they manufactured and sold 10 crores in value terms, 10 crores of masks during this 1 year period, and they were able to survive. They were able to retain the people, they were able to keep their team, the senior management team and all. And post-COVID, they have again started manufacturing the backpacks, and they are doing around 15 crore of business till now in a year's time, and that product is really doing good. So how they change their business strategy, how they change the business model is what a startup has to work on that. So we have invested, we were early stage investors in that company, and we feel that this company is going to do great progress in times ahead. So product, business model, market, team, and capital requirement is what the focus should be while presenting to the investors. So marketing the pitch, how do you market to the investors? How do you present your business to the investors? So before going to the investor, you should know who the investors is. You should know about the background of the investor, what type of fund that is, in which sectors they invest in, what is their earlier investments, in which companies they have done the investment. So you fairly understand before you go to pitch them. You should ensure that you should know the investor's background. So while communicating with them, they fairly can understand that you have come well prepared. Work on your pitch. Again, your pitch should be very, very comprehensive. Earlier, at one point of time, we were seeing 40 pages of PPTs and all. That is not the case. Now you have to be very crisp Your presentation should be 10 to 15 slides maximum, and conveying what is the product all about, what is the capital requirement, what is the management all about, what is the problem statement, and what is the solution you are bringing. 5, 6 topics you should touch upon and then close it. So present your business plan properly. Business plan includes your financial modeling, which is very important. Your financial model should convey your next 5 years projections, where you should clearly mention how you, with all assumptions, how you want to raise the funds, what are the assumptions in raising those funds, and how you are going to deploy that fund. That is very important. Increase your investors' interest. It is only not one presentation and the chapter closes. You have to keep on updating the investor, sending mails to them, updating them about the industry you are working, what sort of companies you are competing with. So you keep on updating, because it takes at least 4 or 5 rounds of meeting with the investors to really influence them, to invest in your company. Make your proposal unique. Again, uniqueness means it is not only that your product should be so unique that your problem statement should be very clear, and how you are solving that problem, that should come out in your presentation. And these are some of the very general thoughts, coming. Be humble, avoid exaggeration, do not show desperation, and do not be overconfident. So I've already covered this. What is the business problem you are going to address? These are painkillers, not vitamins. Customer validation is key. Customer validation is important, that whatever product or services you are offering, you need to get it validated through, say for example, 100 such customers. You should approach them, how they are feeling that this product is all about. If you have certain sort of write-ups about the investors, the consumers' responses, you can go get those responses and show it to the investors. So customer validation is very important. At least whatever product or services you are offering, you need to approach the customers, the end users who are going to consume that, and validate that product, and get a report of that and submit to the investors. This is what our customers or our users feel about. Again, entry barriers. You should not be, you should not have many competitors for your product. Then the real charm get lost. Because investors will not really focus कि बहुत सारे competitors हैं, इसमें क्या पैसा डालें. So your product should be unique, and it should keep on changing as per the dynamics of as per the changing dynamics of the environment you are working. And what is important is the IP protection. If your product or services are unique, make sure that you patent it. I have already covered. Your revenue model should be growth oriented. It should not get stagnated. Every year you should show some growth. Now, because of all the negative reports we are getting from companies that got listed, now investors are looking that your business model should be EBITDA positive from the very beginning, or at least in a year or two it should get EBITDA positive. So all these things you should keep in mind कि हमको profit कैसे कमाना है. अब वो the old thought process has gone. Post listing of all these 5 or 6 new age companies, the investors' mindset are getting changed. So you need to move as per the mindset of the investors. You need to make your business model profitable. Then marketing and distribution strategy is very important. Go to the market. Strategy should be very clear in your thoughts, and how you are going to expand your business, who will be, what will be the market you are addressing, how you are going to grow that business. So that needs to be very clear. Competitive and forcible exits. This is also very important. What sort of an exit, at what point of time you are giving the exit to the investors. Generally, investors come with a thought process of investing for 5 to 7 years. So you need to be sure at 5, say for example, 5 years or 7 years, you are going to bring an IPO, or some strategic investor may come in and take the investor's stake. So you need to be, You need to give a clear roadmap to the investor कि 5 या 7 साल में हम आपको exit दे देंगे. That is very important. This is fairly about the market I have covered. Size of the market, you should have that data. What is the size of the market you are going to address, and what is within that addressable market, what will be your position, where आप 5% का market share लेने वाले हो, 10% का market share लेने वाले हो. You should be very clear. You should have that data with you. Very important, because investors are very focused on the data. And if you fumble on the data, it's really there will be no there will be not going back. Investors will have a different view on that. Innovation is very important. The example I gave, how they innovated, moved to the masks, and they were able to survive. So you need to be quite innovative. You should know your competitors, very important. Who are the competitors who are going to compete? How different you are from your competitors, you need to be very clear on that. Your product positioning and timing of the market, timing to market. You should be a first mover, or how do you time the market, You should not be ahead of the requirement, आपको समझना पड़ेगा market आज ये चाहता है, तो you should be the first mover to address that market. Again, team, very important. We have found many single founders, coming to us for raising funds, but we believe that team is very, very important. There should be a founder and a co-founder who should be a team, and there should be a core team around that founder and co-founders. Very important, a product officer or a CFO sort of a guy. So 4 or 5 people should form a team and then make a presentation to the investors. A one-man show, generally investors don't like, I've seen many investors, many startups coming with a one-man team and giving the presentations. We outrightly reject that type of proposals. Team is very, very important. Just last point I'm trying to hint is ownership and stock option. To retain a good team, what is important is you should have a stock option in place, So retain a good team, give them shares of your company at a very early stage, so that they are retained with the company, and they are able to give best output for that. This is the process, we submit the proposal to the investors, they do the preliminary evaluation, then they start negotiating, the entire process generally takes 6 to 9 months, It's so not that easy that आपने presentation दिया और आपको मैंने पैसा मिल गया. So you need to understand there will be initial negotiation, they will ask for a valuation, you need to be prepared with your valuation metrics, what is the valuation you are able to offer. Then they will move on to, once they accept the valuation part of it, then they will start, okay, we are ready to invest at this valuation. So they move on to the deal, due diligence, business due diligence. So it can be business due diligence consists of financial due diligence, legal due diligence, operational due diligence. So all these are due diligences which you need to address, and when the investors approach them, you should be prepared with such type of grilling, they will grill you about your business, about your financials, about your legal issues and all. So after the due diligence, they will prepare a report that, yeah, everything is fine, let's invest in this company. Then they will give the final approval. So they will give you the term sheet, where mostly the broad points of the term sheet will be mentioned, that what is the tag along, what is the drag along, at what valuation they are going to invest, what is the amount going to invest, and certain terms and conditions precedent to that investments will be charted out in that term sheet. Then again there will be a detailed financial, once the term sheet is issued, then they will do a detailed financial and legal due diligence. After that, they get a report from the Big Four, maybe a Big Four or some mid-sized firms like they may be giving that sort of a report, and then they decide about the investment, and post-investment they will start monitoring that. This process takes 6 to 9 months and even 12 months. So be prepared for this long process, but you should be prepared for it. These are some of the common mistakes generally a startup make. We have educated many startups, who come to get mentorship from us, that you should focus on these common mistakes, and some of them are like sole founder, not accepted. No co-founder agreement. If there are co-founders, हाँ हम लोग दोस्त हैं हमने चालू कर दिया. That does not serve our purpose, because there can be differences between a founder and a co-founder, and I have seen many such separations happening. So there should be a co-founder agreement in place between the two founders, what salary they are taking, how much they are taking, what is the shareholding pattern between the two or three, whosoever. Create ESOP pool, very important. We always insist that there should be ESOP policy in place so that you are able to retain good talent. IP is very, very important. Again, we have seen many founders, coming with, but no IP in place. We insist कि आप पहले IP को protect करो, इसका patent करो, and protect that product or services which you are offering. Then again, negotiating the term sheet. This is where we are helping many startups, in negotiating the term sheet, because that is very important. Investors का जो term sheet होता है quite elaborate रहता है. So many points are there which need to be understood. Many a time we miss something. So we help in negotiating the term sheet so that we are all on the same page. Again, after the term sheet, there is a final shareholder agreement. Again, that is very elaborative. उसका 40 पेज 50 पेज तक जाता है वो shareholder agreement. So again, a very fine blueprint. Some of the missing lines, terms are there which need to be understood. But here we take the help of some senior chartered accountants or senior legal lawyers and all, who can help us in drafting the shareholders agreement. Again, many a time we find the valuation becomes a big hindrance. Sometimes the investor is not giving the due valuation. Sometimes we sell cheap also, कि ऐसा पैसा मिलता है तो ले लेते हैं. As we see in Shark Tanks and all, चलो close कर देते हैं deal. So, but you have to be very focused and not necessarily वो investors के साथ ही जाना है. You should try other investors who is giving you better valuation. Though it may take some time, but don't dilute early. Your shareholding is very important, because ultimately you will be raising a lot of funds ahead. So if you dilute at a larger dilution, then future fundraising will be a tough time. Then insurance need to be there, then market fit product, PR. So these are some of the then key revenue drivers like I just mentioned MRR, ARR, churn, cost of acquisition. All these things should be very clear. You should be prepared with all these numbers. So these are common mistakes which we feel, and this has come out of our experience. Just charted out that these are some of the common mistakes which a startup should not make. This is post investment value addition, that post investing, how the VCs, I just completed, how the VCs sort of help, in terms of taking the startup to the next level. So they take a board seat, they help in business development, they bring in senior management also. Then they regularly do board attendance, review monthly financials, quarterly strategic review. And these are some of the value addition. They help in business development, they help in executing, if any acquisitions are to be done, they help in that. So these are post investment, supported by the VCs and all. And fairly, I think startup scenario is really going stronger day by day, and we are helping many startups in terms of fundraise, mentoring and all. And I am playing a very dominant role in that. So any other questions, we can take it offline, short of time. Thanks.
Because they have to build up a team after having a financial arrangement. This is the first point. Second point is a collateral security, because VC are asking for some collateral. Third point, what is competition you are asking about? Because he not invented any new product. He is supplementing some product with a market is available. In that respect, what is your view in that respect? There are 3 points what I have raised it.
सी सिंगल फाउंडर का तो देखिए वो कॉन्सेप्ट ही चला गया है कि आज के दिन में सिंगल, सो ही हैज़ टू फाइंड अ लाइक माइंडेड को फाउंडर, आज उसका फ्रेंड सर्कल है, उसका माने सिमिलर टाइप ऑफ पीपल आर अवेलेबल, यू नो, इट्स नॉट दैट some techie guy is there. So you have to have a co-founder where you have to 2 or 3 people coming together and then approaching an investor. Single founder में हम लोग देखा है कि अगर कुछ issue हुआ तो वो startup by itself go down. You know, there is a backup. If there is a co-founder, there is a backup. Secondly, आपने क्या था? कोलेट्रल में ऐसा है कि many a times वो नहीं रहता है वेंचर डेट. तो वेंचर डेट कब प्ले करता है कि दे आफ्टर यू रेज सम सॉर्ट ऑफ अ टर्म शीट, आफ्टर टर्म शीट देयर इज अ गैप ऑफ 6 to 8 months टू गेट अ शेयर होल्डर्स एग्रीमेंट, ड्यू डिलिजेंस होता है. अगर आप टर्म शीट लेके जाते हैं टू अ वेंचर डेट फंड तो गिव अ स्टॉप गैप, ऐसा दे गिव कि भी हाँ आपके यहाँ इक्विटी आने वाली है तो वी गिव यू some venture debt to start your startup, you know. So they come in that point of time, venture debt. और आजकल CGT SME स्कीम है बैंक्स के पास, many startups take some funds from them. सिडबी का एक स्कीम है, वहाँ से मिलता है. तो उस तरह से without a collateral they are able to get the funds. And many times startup के पास कुछ collateral रहता है, कोई founder है वो बोलता है कि हाँ हमारे पास फ्लैट है. No, I am not telling competition should be avoided. अभी हम लोग एक कंपनी को एडवाइस कर रहे हैं, दे आर इनटू फाइन डाइन, और द एड्रेसेबल दे आर इनटू पैन एशियन फाइन डाइन. द एड्रेसेबल मार्केट, टोटल एड्रेसेबल मार्केट इज 58,000 crores, अनऑर्गेनाइज ऑर्गेनाइज मिला के. तो इफ दे टेक इवन 5% शेयर, देर आर मेनी अदर कंपटीटर्स, वाओ मोमोज भी है, वो कलकत्ता भी है, सब है, पर अगर 5% भी ले लेते हैं एंड दे आर यूनिक, दे हैव सर्टन यूनिक प्रोडक्ट्स, 5 hardcore selling products, you know, and they are focusing on that. So even now they have gone for some aggregating kitchen, all these things. So they are innovating their products, you know. So आज 58,000 crore का मार्केट में अगर 5% शेयर भी ले लिया तो 2,500 crore का मार्केट उसके लिए है. So competition is there, but you see how big is the competition. उसमें भी आप 5-10% भी ले लें तो that's good enough. It makes your day. See, we do, yeah, valuation is a tough job for us, but we try to compare with certain peers. और भी सी इस फील्ड में कोई कुछ डील हुई है तो वो उसका हम लोग वैल्यूएशन लेते हैं. कोई लिस्टेड कंपनीज का है तो क्या पीई में वो, क्या मल्टीपल में वो है, तो दीज आर सर्टन पैरामीटर्स वी टेक, बट अल्टीमेटली इट्स मोर ऑन नेगोशिएशन. ये स्टार्टअप्स में हम लोगों ने देखा है कि हाउ यू सिट अक्रॉस एंड हाउ यू नेगोशिएट विद द वीसी फंड इज मोर इम्पॉर्टेंट रादर देन ऑल दिस. हाँ, सम बेस वी ट्राई टू हैव some base, you know, by doing all this valuation metrics, but it is ultimately sitting on the table and negotiating with the investors. We are both. We mentor and we invest also. We have done some 15 investments in startups till now. It is not only technology, but it is hardcore startups also we have done. Like I gave you the example of this backpack company. We have invested 75 lakhs in that company. We are early stage investors. Thank you. Thank you.